This is the problem with your generation.
What the hell are you talking about? Who are you talking to?
In this video, I will dive into the practical strategies that you, the millennials, can actually build upon to create a better financial future, to navigate your debts better, and in general, have a better financial understanding of different pieces of the financial well-being and your financial life. I'm Ella Gurfinkel, Senior Loan Officer, Team Ella at Fairway Independent Mortgage, and I'm really doing my best to bring the most up-to-date and relevant content that is in and around the mortgage realm and the financial well-being for the majority of my clients and the majority of the viewers. Do I express my own point of view? Yes and hell yes, because that's pretty much what everybody does. Everybody has their own skin in the game. Everybody has their own point of view, because otherwise, as I said, the world would be gray if we all thought the same, acted the same, and did the same. Well, there are a few issues with the millennial generation. No, I'm not one of those people knocking you guys for being lazy, for being this, that, and the other, because you can't generalize. You can't generalize my generation just the same way you can't generalize yours. But there are a few things that the millennials do tend to suffer from. And I say tend to suffer from as a little bit more general term, but yes, those are the things that I see a lot of millennials be affected by. It's a trend, maybe, or is it a trend? Or is it something else? So let's talk about that, and let's talk about how it affects your financial well-being, because that's really what my channel is all about. It's the financial well-being, it's the financial structures, it's being able to buy a home and being able to invest in your future. So let's roll and let's talk about the things that affect the millennials specifically. Nobody is, I think, more social media susceptible than the millennial generation. Am I generalizing? Possibly. But the reality is that the social media has become this addiction for so many in terms of parading all the highlights of your life, but never really showing the lowlights. And what everybody sees is how well somebody is doing, how amazing their life is, how great their home is, how great their kids are, how great their cars are, how much money they have in their bank account, what goodies they have to show. Don't fall for the trap. Because highlights aside, everybody has problems. Everybody's lives have issues that they're just not talking about. So the peer pressure becomes absolutely immense, that you have to keep up with the Joneses, as we used to say back in the day. You don't have to. Live your own life and don't try to match somebody else's image on social media. Yes, Facebook is for oldies. Insta is your generation. Don't try to be like everybody else on Insta and how beautiful their life is, because the warts, the sickness, the mistrust, the whatever else simply doesn't show. Don't follow in everybody else's footsteps. Be yourself, and that's probably the biggest and main thing, and especially be yourself when it comes to your financial decisions, because that is the most important thing. That is how you will actually achieve financial independence and reach your financial goals. Prioritize your financial stability. And again, prioritize your financial stability. I'm not repeating myself because I'm old and senile. I'm repeating it because I want that to sink in, actually. Because again, the pictures of brand name stuff on Insta and other social media, promotions on TikTok, whatever else, that's marketing. It's doing its job. But are you doing yourself a favor by spending money on things that you don't necessarily need or can build wealth with, because somebody is doing a hell of a job promoting it and you're trying to keep up with what's in trend and what's in so you don't fall out? Is that something you really want to do? Because if you want to be financially stable, if you want to ever actually pay down your student loan debt, if you ever want to have your own roof over your head, whether it's a condo, a townhome, a house, by splurging on the trendy, brandy stuff is not going to get you there. So don't fall into the brand trap and flash trap by following social media once again. Be yourself, and once again, personalize your own needs, prioritize your own financial needs So you're not keeping up appearances just to appear to be all good. Prioritize what's more important from the financial standpoint. To build a solid financial foundation is your step number 3. Have a budget. Not having a budget has been a pitfall for probably 3 generations now. This is not a knock on millennial gen. This is pretty much a knock on Gen Zers and frankly on baby boomers too, because the art and the science of budgeting and actually being able to stick to the budget has become pretty much a lost art. Budget will show you the gaping holes, but budget will also show you where you're spending too much on things that don't need to be spent on, or not spending enough on things that need to be spent on. And the budget, any budget, needs to be really done up with the focus on the financial future. So not just with the mind on and the focus on today, but also on the focus, what are the steps that will get you to that financial future that you really want and envision for yourself? Because if you don't know what you want to achieve, it's kind of hard to budget for that today. So figure out the long-term plan, the medium-term plan, and then figure out what the budget needs to be for that plan based on what the goals are. One thing that I see a lot of the younger clients, younger people, is not being able to leverage your raises and your bonuses at work. And that is actually probably the most overlooked financial benefit and financial tool that you have at your disposal. Because with not enough qualified people in the workforce, you can leverage that, you can ask for raises, of course, qualified raises, and that's a whole other conversation. But when you do get a raise, how does that play into your budget? Are you able to save that money, put it aside for a nest egg? Are you able to set aside for a down payment to buy a home? Or are you doing what with it? Please share in the comments, if you had a raise today, what would you spend the money on? I'm just really literally curious about how you would spend your raise or your bonus. Because little do you know, but your bonuses can add up to a pretty sizable nest egg, and they can add up to a pretty sizable chunk of money that you can use for down payment to buy your own home. Did you know that? So legit question here. How would you spend your raises and your bonuses? And if you knew that you could use them to buy a home, how do you feel about that now that you know, if you didn't know, or how did you feel about it that you knew? So comment please, because I really want to know where you stand on that. But more importantly, again, budgeting, raises, and bonuses are all pieces of the same puzzle of your financial well-being. So how you're playing them, and how you're playing them wisely, is really the bigger question. So every step I talk about actually builds onto the next step. The next step in your financial well-being is making extra payments. Normally, I talk about making extra payments towards your mortgage if you own a home. Now, if you have a lot of debt and you're not really at the mortgage part yet, or you do own a house, but you also have debt, making extra payments on your mortgage, frankly, makes little sense because you're paying off the good debt, the debt that actually gives you a tax deduction potentially, versus not paying down potentially on the debts that give you nothing in return. Prioritizing what to make your extra payments towards, whether it's your credit cards versus the home versus the student loans versus the car loans, what gives you the biggest bang for the buck? Are you really considering which items are higher on the good debt level versus bad debt level, and how to prioritize those? This is something that really does need to be taken into account if you ever want to really create some kind of wealth for yourself and your family and actually get ahead of the rat race. Now, the next one also ties into that same theme of the bigger picture, the bigger financial well-being trajectory, and that is investing into real assets. Is crypto a real asset? It's probably a thing for a whole other convo as well. But investing in real assets, yes, I think in the long term, crypto eventually will become a real asset, or maybe already is. And yes, cryptocurrency can actually generate enough of a return. Assets that will generate a return, real assets, a home, a car is not, but investing in retirement accounts and investing in perhaps even the index life insurance accounts. Again, not a financial planner here, full disclosure. This is just real life stuff without giving you full-on financial advice, qualified financial advice. The investment into real accounts, into real assets that will translate into bigger assets down the pike is really the goal that you want to have. There are no millionaires out there who don't own their own real estate. So just think on that for a while. The real value, the real assets, real estate, millionaires, 90+% of all millionaires started on the path to becoming millionaires by investing in real estate. So again, real assets, fill in the blank, right? While doing all of that, you want to avoid the debt traps. And the debt traps are super easy to fall into. I know for a fact that nothing has changed since yours truly went to college and we had credit cards thrown at us by all manners of banking institutions. So here is your perfect recipe for disaster, right? You're a student, you basically have no job or no job yet, or a very part-time, very low-paying job, and you have credit cards being thrown at you. How easy is it to fall into the debt trap from the get-go just by stepping foot on the college campus? And I see the same with my kids, how easy it is to get the credit cards and get into debt. So avoid the debt traps. We're not talking just about the credit cards. We're talking about, do you really need that flashy car? Do you really need a car payment that's, $600 versus $500 versus $400 a month? How are you going to take all that in? What's happening to your student loans? What else do you have for debts? So do not fall into the debt trap of financing things that you don't necessarily need. Yes, it may seem like you need them right now. Trust me, there are lots of things that I need, really want, but I can justify it as needed myself. But it's becoming more fiscally and more financially disciplined in order to not fall into the debt trap, because it is super easy to accumulate debt. It is super easy for somebody to rack up tens of thousands of dollars in credit cards and unsecured loans, student loans aside, auto loans aside. When I look at clients' credit reports day in and day out, and I see, like I said, literally thousands that stack up to tens of thousands of dollars in unsecured personal loans, in credit cards, it's heartbreaking, because I know how hard it is to break out of that trap, literally, or that debt prison, and be able not to have those payments hang over your head, because now all of that stuff gets in the way of you being able to buy your own place, your own roof over your head, because you're overburdened by debt and you're now literally in that debt prison. And probably my biggest goal is to teach people not fall into that, to be able to actually afford their own home and have a nice, good life for yourself and your family, versus being stuck in the rat race of paying your debts with nothing to show for it. And goods are not something you show for. It's what you leave your family as your legacy, as your financial legacy, i.e. your home or multiple real estate holdings and multiple investments. And I know I got super deep here, so let me just talk about the little bonus reel at the end. The technology that you have available is something that my generation didn't have. We had spreadsheets and we had paper. You guys have computer everything, device everything. So use it to your advantage. And this is the real bonus indeed, because a lot of those tools are so freaking easy to use and are free or cost very little. But use the tools that are available to you. The online calculators, the budgeting apps, the apps that will help you identify all of your subs that you're paying for, from Spotify to Netflix to everything in between. How many streaming platforms do you need? Use the tools, the electronic apps, the whatever that you have available at your fingertips that will actually help you identify the holes and gaps in your budget, will help you create the budget, and will help you become financially independent, financially secure, and be able to afford all the things that you want, like your own home. Because you know how many millennials right now are saying they can never afford to own a home? I beg to differ. If you really strive for it, you will get there. But you need to have a path, and you need somebody to guide you in the path. So ask your questions, leave me your comments, and I will see you in the next one.